Hey everyone, this is Richard, CEO of Altfins. In this trading video, I will show you how to swing trade assets that are in an uptrend and are bouncing up. So, as the market is bouncing from oversold levels overall, I'm going to look for assets that are in an uptrend, have pulled back and are bouncing up, and are very likely to continue to bounce up and continue in their uptrend, right? I like this trading strategy because I'm trading with the trend. Trend is my friend, right? So it's a higher probability trade, probability of success, because I'm trading with the trend, not against the trend. And I'll also demonstrate how to set your price target as well as your stop loss level, which is absolutely critical to have risk management in place because you never know when a market event, a macro, or even an asset specific event may take place, and the prices for overall the market or just that specific asset may move against you very rapidly. So having stop losses as well as other risk management techniques like the proper trade size and also the reward to risk ratio. Using these techniques is absolutely critical for success in trading, and particularly long-term success in trading, so you stay in the game and don't blow up your account. And also, I advise against using any leverage whatsoever. So also, I'll mention that this trading strategy that I'll demonstrate in this video is available in our education course, which is free currently to all users. So take advantage of this, educate yourself. There's 7 different trading strategies that are explained and demonstrated in 10 lessons. There's also a lesson on risk management. And this particular strategy that I'm going to demonstrate today is available in lessons 4, momentum and uptrend. So go ahead and dig into that. It's a free resource for you to make yourself a better trader. And also teaches you how to leverage this platform to find the trading ideas. All right, so the trading strategy that I'm talking about is really easily accessible. It starts with a market scan that we call uptrend and fresh momentum inflection. And I'll explain what that means. So once I select that, I'm down to now from 3,000 assets out there, 4 assets satisfy this market scan criteria. And the criteria is that the medium trend has to be still up. The system has a trend rating system or methodology that rates, constantly updates trends for all these 3,000 plus assets on our platform across short-term, medium, and long-term. Now, I pay attention more to the medium-term and the long-term trend, and because the short-term trend can change very quickly. And so these 4 assets are still in a medium uptrend, as you can see, either in an up or a strong uptrend. And that's the first criteria we have here. The second criteria basically says, I want the MACD histogram to be in an upswing. And I'll explain what that means. But under the momentum tab here, as you can see, we have the MACD crossover, which is still bearish, but it's inflecting, right? And therefore the MACD histogram is bullish. And that basically helps me pinpoint or spot those assets that have bounced up and are now swinging up, right? There's momentum in their price, has inflected from down to up, and there's very likely continued sort of momentum in the next few days in the direction of the existing uptrend. Okay, now let's take a look at the charts. I'm going to give myself a little more space here. Okay, here are the charts. So I'm going to get rid of the 50-day moving average for now, where we have here, even the RSI is not important right now in the strategy. So I'm left with really a 200-day moving average, the price, and the MACD for all these 4 assets that satisfy this criteria. Okay, all of them are trading above the 200-day moving average. Clearly, they would not be in an uptrend if they were not trading above the 200-day moving average. That's a given. But as you can see, in terms of the MACD, these blue bars are MACD histogram bars. And there's more information about what MACD stands for, moving average convergence divergence. It's a very powerful trend and momentum indicator in one. But when the blue bars are rising again, as you can see here and here and here, that shows me that the price has bounced and is rising again and is entering sort of an upswing phase of its trend. So now we have these 4 candidates. I need to determine, and I'm going to use CASPA as an example. I like this. It's in a strong uptrend, if I correctly remember, right? And I like this upswing here that I see. It's still in early stages of this upswing relatively. So let's demonstrate where do we find the price target, where do we find resistance support levels, and also where to set the stop loss level for risk management. Very critical. Okay, so let's go ahead and open up a trading view chart for this asset. All right, let's get a little more history here. Okay, fill it in a little bit. Okay, now that we've got, call it 6 months worth of history here, I think it's clear where the resistance is, right? Resistance is where the price oftentimes inflects. All right, so let's go ahead and demonstrate that. As you can see, price back in February reached this level. What was it? The high was around 19 cents and change, and inflected and retreated until it bounced back up again reached the same or approximately the same level, got rejected, pulled back again. Just recently, what, 2 weeks ago, less than 2 weeks ago, 11 days ago, it reached that level and got rejected again. Clearly, this is where a lot of the supply from sellers, the selling pressure, arises, and so emerges. And so there's a lot of sellers here. At some point, this resistance area is going to get broken, and the price will continue to advance. But for now, we have to respect this resistance area as our price target, right? So call it right here. If I connect these levels approximately, I'm at about 19 cents or just above 19 cents, because 19 cents is right here. So this is got to be about 19.4, 19.5 cents. Okay, so that's my resistance, and that's my price target. If I'm going to buy it here at 17 cents, my price target is that the price is going to swing back up here to these 19.5 cents. So that's about a 14% potential gain or profit. Where is my support? Okay, so this is resistance. Let's make it red. My support is where price has found and bounced off of this level a few times. Okay, so right here it bounced off of that level here, but also it could be a level that was previously resistance, and that's a concept known as polarity. Once resistance is broken, then that level becomes support. So once broken, the resistance becomes support. It's called polarity. And so I'm looking for a level where that was previously resistance and then became support, right? It was resistance here, it was broken and became support, and so on and so forth. So I'd say the support is, oops, right here around 15 cents. Let's make that green. Okay. Now, if I'm going to enter the trade here, as you can see now, what we saw here is that the price pulled back, bounced off of that support nicely, respected that. I mean, it pierced through a little bit intraday, but for the most part, it bounced off of the support. And now we're about to enter that trade. As you can see, the MACD histogram bars are rising again. In the trading view chart, you can see that by the color of the MACD histogram bars change from dark red to light red. Okay, and so, you know, more than likely it's gonna continue up, and the MACD histogram is gonna make a nice brown, brown sort of, zone, or not brown, green zone. But the point is that I'm expecting the price to continue to bounce up to that 19.4 cents. But where do I set my stop loss? Well, I set it, typically, I set it at just below the prior swing low. The prior swing low was here. So this is the bar right here, the candlestick on July 8th. And the low of that was about 15.4 cents. So I'm going to set the stop loss right about there. Okay. Now, also in the education course, you get access to the Excel spreadsheet where you can calculate some interesting or important reward to risk ratios. So if my entry price is 17 cents, which is where the price is now, my stop loss price is 15.4 cents, then my downside is about 9% or 1.6 cents. If my entry price is 17 cents and okay, and my exit or target price is 19.4 cents. Okay. Oops, I see what's going on. I'm typing it into the wrong cells. There we go. Okay, so if my entry is 17 cents and my target price is 19.4 cents, then my upside is about 2.4 cents or 14%. So when I compare my upside, my reward to my risk, it's about 1.5 ratio, reward to risk ratio. How much can I profit or gain from this trade versus my risk, depending on where I put the stop loss? It's about 1.5. I typically target 2, a ratio of 2. So I want my upside to be twice as big as my potential downside or my risk. So this is not ideal. I like it to be higher. Now I could make the stop loss price to be, higher, maybe 16 cents. Oops, sorry. Okay, or maybe a little more. I mean less than that. So call it. Okay, I'm getting there. Okay, so that could be my stop loss price instead. And that would make that reward risk ratio 2 to 1. Okay, I mean 2 times, or 2 to 1, that's right. So that's where this Excel spreadsheet or the thought process is really to help you understand the thought process, and this Excel spreadsheet is available if you want it. The other important part is your portfolio value or your trade size. How big is the trade size? Let's just say portfolio value is $1,000. You don't want to risk more than 2% of your portfolio on any given trade. Okay, so that calculates the trade size for this portfolio value. The appropriate trade size is $283. That should be the size of your trade. If you have a bigger trade portfolio value, obviously that increases with that. So that's another important method for keeping or managing your risk. You don't want to go all in on one trade. You don't want to have few big trades. You want to have many small trades, because trading is about statistics, and we need to do a lot of small trades for the statistics to demonstrate themselves. Okay, so having covered that, that pretty much, at this point covers it. Again, this is a very powerful way to find some trading ideas. I like it because I'm trading with the trend, and I'm entering at an opportune time when the momentum has just inflected bullish, and the price is about to resume its uptrend, an existing trend, right? All right, everyone, I hope this helps you. Again, leverage the free resources available on Altfins, which is the education part, to improve your knowledge. And if you have any questions or feedback, please email us at invest@altfins.com. Good luck trading.